Hello students and welcome again to Legacy IAS Academy. In this lecture, we will be analyzing as to why the stock markets are falling. So of course, UPSC aspirants will be interested, but I believe various other people would also be interested as to why it is falling, what is the reason behind it. So let's get started with the news. What is the news about the market? The news is that there has been a 1.9%, that means approximately 2% of fall in the stock market in a single day. Apart from that, if you talk about the last 2 months, close to 7% of fall has been seen in the last 2 months in the stock market. So the market is falling. When the market falls, you feel that is it the right time to invest or should I let it fall even more? That is one question. The second question that can be in front of you is, if you are already invested in the market, should you get out of the market right now by let's say booking small amount of loss or whatever amount of loss presently, or should you wait even more? If you wait even more, there is a possibility that it is going to rise back again, but there is also a possibility that it is going to go down further. As you can see that in the last 2 months that is happening. So it becomes a tricky situation as to what should be done. Now in this lecture we're not going to advise you on that, but we are going to see what are the reasons for it and what the future holds for the stock market. Now before we go into the detail of the news, very important thing that I'm going to tell you, that for specifically for UPSC 2025 aspirants, that we have started from 21st February the revision of entire year's current affairs of each and every subject. It will of course cover the important topic of last 1 year. For every subject it is there. Also you will be provided with content in brief, which is very important because that will fasten the pace of your revision. Now this entire thing will be covered on YouTube, Legacy IAS Academy's YouTube channel, every day at 8 p.m. So stay tuned to that. Now once your prelims is done, of course mains is what you prepare for. Now the time for mains is quite less after prelims, right? So you have to focus on your answer writing skill, and Legacy IAS Academy has come up with the Impact 2025, that is intensive mains practice and content training. Here it's not just the feedback that you will be given or the answer checking that will be done. Apart from that, you will be given personalized feedback and mentorship. This is very important. You will understand what the feedback is all about, how to improve. Guidance and mentorship will be there, in addition to of course the comprehensive writing practice and content enrichment notes or sessions that will be provided. This will be there for all GS subject plus essay, having over 34 sessions. In fact, exactly 34 sessions. The timetable would also be there on the website, and it will have around 50 plus hours of classes in these 34 sessions. So go for this. This is going to change you with respect to your answer writing, change in the positive sense, improve your answer writing. So let's get back to the news. The markets are falling, we all know. Now what is happening is, very recently Donald Trump has given a statement that he will impose tariffs on all the BRICS nation if they try to de-dollarize. Plus he has come up with his own policy of custom duties on the imports, which the USA is getting, sort of increasing the import duties, etc. Now that is going to have various multiple effects throughout the world because of the globalized nature of the world. Now here also, when Indian markets are falling, many people are questioning, is it because of the trade policy? Should be policy here, trade policy. Is it because of the trade policy of Donald Trump? The answer is probably not. Of course there are external factors that do impact, but here it is majorly the domestic factors which we will see. We also have taken an example over here. So the past example suggests otherwise. The example that we have taken is that of China, which grew at around 10% annual growth rate, not just for 5 years or 10 years, but for a total of 35 to 40 years. Even though there were huge amount of tariffs imposed on China, not just by USA, but other first world countries, Western world as well. But still China did this. Now it cannot be exactly the same scenario as India, because India also follows democracy, rule of law, which China, we all know whether it does or not. Now, then how is this happening? That is How did it happen? How did China manage that? Because of strong domestic economy. Can we see the similar nature in India as well? Yes, India also has a strong domestic economy. One major thing or major reason for that is India's population. India's high population ensures that there is high demand in India. So if someone from outside doesn't demand it, let's say USA increases the import tariffs, custom duties, so our goods and services will become costlier in USA, so people would not want to buy our goods and services. But no problem. See, problem will be there, but not to a huge extent, because we have huge amount of domestic demand to cater for, which China also had. And not just that, so domestic market is not just about the demand. Demand, however, is very important. Apart from that, the macroeconomic factor which needs to be stable, the growth rate of the economy, the inflation in the economy should not be very high, and these features are present in India. Of course, you might slightly disagree saying that inflation, sir, is presently high. Yes, it is, but it is on account specifically, as the economic survey has discussed, due to food inflation, and in food due to tomato, pulses and other vegetables, for example, and that is going to be addressed through Atmanirbharta in pulses. And also, as you know, El Nino is fading away, La Nina is coming, so production is supposed to increase, so we can address that. Anyway, moving ahead, then why is the market falling? Of course, not only the external factors, but the domestic reasons. What is that? Number one is the slowdown in the Indian economy. Indian economy is slowing down. The slowdown does not mean that there is no growth or growth is negative or it is shrinking. No, slowdown means the growth rate that is there, it is going down. The growth rate of the economy is going down. That is correct. But in fact, the more important role here is played by the higher stock valuations or the expensive nature of the mid cap and small cap market. Now, what is mid cap and small cap market? We'll see that. So, and that is the reason why the stock market is probably falling down. Also, the reason why the foreign portfolio investors are pulling out their money from India. So, let us understand what is the small cap, mid cap, and large cap. Now, whenever you buy shares, mutual funds, right, you buy it of a certain company. Now, this company would have some amount of capitalization in that particular sector. So, when that company has a small market capitalization in that sector, it is known as a small cap company. If it has a medium level or mid level capitalization in that sector, it is known as a mid cap company. When it is a large market capitalization in that particular sector, it is known as a large cap company. So what are these? There are specific objective criteria for that. So a small cap is the one which has less than 5,000 crore as market capital, market cap. Mid cap is the one from 5,000 to 20,000 crore, and large cap are more than 20,000 crore. Now, generally, it is felt that when you invest in small cap, there will be high risk, but there will be high return. So, it is basically high risk, high return. When you invest in large cap, there will be low risk and low return. In medium cap, there will be medium risk and medium return. So based on that, you can decide in which kind of company firm you want to invest, which kind of mutual funds you want to invest, right? So what happened? We are mentioning that the market valuation of mid cap and small cap went high. Why? Because people started investing a lot in small cap and medium cap because the returns are higher. Higher in the sense assumed or considered or analyzed to be higher. Why? Because small cap, small market capitalization, there is a huge potential of growth. A company with a huge, large market capitalization, it will require a huge amount of growth even to grow by a certain small percentage. It is the base effect that is coming into picture. That is why a huge investment have been done in small cap and medium cap. So the tendency or the psyche of the market was to invest more in that. When that happened, when people demanded small and medium cap more, the market price of these shot up. The shares, the mutual funds, all those shot up, and for the new players to come in to buy these small cap and medium cap, it required more money. That means it became expensive. and now since it became expensive, the investment in them will be lesser. So slowdown will happen. At the same time, initially the foreign portfolio investors and even retail investors, Indian investors who had invested in such shares and mutual funds would feel that I invested when the rate was 100, now it is 200, it's good enough, let me get out of here, booking 100% of profit or X% of profit. So that is why the foreign portfolio investors are also taking out the money, because now it is very expensive and now it has saturated. Now probably it will fall down. Because of that estimation, the money is flying away from that. So this is one of the major reasons of the falling of the share market. Now, what will happen? What does the future hold for the share market? Now, generally what happens is, whenever there is too much of growth or exponential growth or sudden growth or sudden fall, then the market subsequently corrects itself. What I mean to say is, if it is growing like this, but then there is a sudden fall, it will correct itself again, maybe to a lower level, and then continue its growth. This is generally what will happen. This is generally the trend or historical happening which is there. However, it's been 2 months and it is still following. But in the near future, many experts are saying that it is going to correct itself and be back on growth track. Why? Because there are no fundamental issues. India's current account deficit is good. The rate of inflation is fine. Of course, it's on the higher side, but it is going to be controlled, specifically with the increased production in the agricultural field. The corporate and the bank balance sheets are healthy, in fact, because there were higher NPAs up to 11, 12, 14% as well, which is coming down. So the health is better. What is the issue, however, that still remains is the weak demand. You should demand more. So demand is weak. That is the problem. If the demand is weak, what is the solution? The solution lies in monetary policy as well as fiscal policy. So if we look at the fiscal policy, what components of fiscal policy? Government expenditure. Demand is weak. So how can the demand be increased? Demand can be increased by expenditure from the government, from the private sector, from the household. From the government, you can do the expenditure through what? Through the fiscal policy, you can increase. These are the components of fiscal policy of the government. This component was what the government has to increase in order to increase the demand. Plus, there are, of course, monetary. This is monetary policy tools. What are the monetary policy tools? Cash reserve ratio, statutory liquidity ratio, bank rate, repo rate, reverse repo rate, marginal standing facility, open market operations. So what you can do is, you can basically, for example, reduce the repo rate, which RBI has done. It is for the first time in almost 5 years that the RBI has lowered the repo rate from 6.5% to 6.25%. Right? Now, what will happen because of this? Since the repo rate is low, now the loans will be given at a cheaper rate to us, so that more people will demand loan. More loans means more money to spend, which will mean increased demand in the economy. So this is how it can help. Plus, another thing that the government has done is the tax cuts in the income tax. Now the slabs are 0 to 4 lakh, no tax needs to be paid. 4 to 8, 5%. 8 to 12, 10%. 12 to 16, 15%, 16 to 20, 20%. So let's write it down. 0 to 4 is 0. Then you have 4 to 8 is 5%. 8 to 12 is, you need to write it down, it's very important, 10%. Then you have 12 to 16, that is 15%. 16 to 20 is 20%. Then you have 20 to 24 as 25%, and then greater than 24 will be 30% of taxation. So this slab is a much improved slab, and it is going to have less burden on the taxpayer. That means more income in the hand, more disposable income will be there in the hands of the public. Hence there will be increase in the demand. How? Because of more money, there will be increased consumption expenditure and increase investment in expenditure, leading to increase in demand, as a result of which we will see the correction and subsequent growth in the share markets, hopefully. Thank you.